In yesterday's video, we discussed the trap that was at hand. Today, we need to discuss why the nail in the coffin, in my opinion, is now here. We need to start discussing the possibility of more downside to come and why I believe PAL will be that ultimate factor. We have the data we need, PPI, CPI, and now PCE on top of that. And we're going to be going over that data and price targets specifically. And we've hit every level to a T over the past week. So we need to dive into where those money making opportunities are. And I have one stock play again that I believe will be an absolute killer. Let's get into it. Now, as we jump into the charts, I want to point out a few things. We've hit every level to the T. If you don't believe me, go look back at some of the videos, go look at our targets, and it's all backtracked on Twitter so you can verify that also. We look at the EES, you came through every single demand. We broke right down into the 200 SMA, hit it to the tick. We go over to NQ, which in my opinion, NQ has led the market entirely. Perfect drawdown to the downside, right to the 200 SMA, and you're bouncing so far. But there's major concerns here that we need to talk about here in a second. And we also need to discuss PCE. But before we do that, I have to ask you to consider doing two things: liking and subscribing. Every single day, I make these videos for you. I give you the fundamentals as well as the technicals so you are prepared and have an understanding of what's happening with the market. You need to understand what's happening with futures before you even consider trading any equities and stock, because a lot of the time, futures are going to move your stock more than anything related to that stock specifically. If the market is dumping, then you need to know why and have an expectation of why so you can trade based on that data and that understanding with supply and demand as well. But if you want to get some of this information in depth, Twitter is the best way to go as well, right? So Twitter, I post all of this. I post all my charts, all my targets, everything in here as well. 200 SMA had it right there. Again, I was posting for days that you were coming down here. It's all backlogged. And not to mention the last thing as well, right now there's only 4 more spots in the Discord. So check it out if you want. There is no pressure whatsoever because we do have tons of free content, right? And if you're not ready to take that next step to really bump up your education for the $60 tier, then stay here, right? I want to encourage you. We have live streams. We have tons of content here on the YouTube channel. So make sure you're not under that forced pressure of like, I'm going to do this to get rich quick, because that's not what happens. It's education, understanding why we trade, what we're looking for, different setups, risk management, everything in between of real options trading, right? So let's get back to the video and let's start going over some key bullet points. Now, what I want to do really quick is go over very quickly this data. And then I want to start with some of the fundamentals and work our way towards the technicals. If we look at the data, right, what happened yesterday? We had PCE spending, right? We had PCE spending, and then we had our PCE actual index and core PCE. Now today, we had higher spending, which I thought was a really good indication of what was happening with PCE. If spending is going up, I have to imagine PCE probably is going to go up also. And boy, were we right. When we zoom in just a little bit so you can see here, if we look at normal PCE, the price index, you had an expectation of 0.5% month over month, came out 0.6% with a massive rise. Previously, we were at 0.2, you came out at 0.6. Expectation on year over year, 0.5.0, came out 5.4, smashing expectations. And then you literally beat by 0.1 from last month, looking at your last reading. Going into core, what happened here? Expectation of 0.4, previous 0.4, beat by basically double that. Pretty gross. Looking at year over year core. This is really, core is going to give you the better viewpoint of what's happening here, right? Core smashed again, 4.3 to 4.7, rose by 0.1 month over month. This is concerning, okay? Everything that's propped us up on the Nasdaq has been on the underlying fact of what's happening with data, that the Fed's tools are working. But what have we seen? When the resurgence of energy prices go up, when the resurgence of spending goes up, and we start to see demand drop in certain areas, we've seen companies make less money, but inflation stay at very critically high levels. Why? Unemployment. Okay, I can only say it so many times. Until unemployment drops, which we saw the data yesterday, that more jobless claims were down in expectations, we cannot expect this snowball effect to slow down, okay? And I have some notes from the Fed today also. But what I want to say really quick, we're just going to quickly go over this also here on what the Fed said. Fed Bullard, inflation expectations have now returned to levels seen prior to the 2021 inflation shock. Pretty concerning, right? We're going back. We're taking steps back. Fed Bullard, markets have factored in the possibility of a changed fiscal stance as well as more aggressive Fed. I would disagree. I would 100% disagree. If we look at the VIX, we look at what's happening to underlying yields. Bonds are skyrocketing. That's the one thing that's being priced in. But if we look at the actual volatility, what's happening with the index, I would still disagree. Scroll up just a little bit more to see exactly what Bullard said up here. Again, viewing the price increase as a temporary setback has harmed the Fed's credibility. Right? The first instance of us acknowledging the Fed's credibility going down, we need to move quickly to shield the Fed's credibility. This is interesting. What do they need to do? If we also look, what do we post on Twitter here? What was one of the interesting things that was happening today? A study revealed today the Fed may need to raise rates to 6.5% to cool prices. Right? Because what they're doing now is not working. But the question is will over tightening, will it really affect it immediately? Is it going to be a lagging indicator? What's going to happen there? That's the concern right now. This is what's happening with the fundamentals, right? It's not just, X's and O's and looking if we're going to bounce here and there, right? We're getting really shitty reactions too from these supports. From demand, you wick right through it and invalidate it immediately. From that point, it was a no-brainer for me. You bounced up, I instantly went short again on Amazon, right? Dropped right back down to our target, getting a little bit of a bounce. But the reaction is nothing short of shit, if we're being brutally honest. And I'm sorry, but that's what it is. If we come to like the 15-minute and we look at the reaction here, it's terrible. Yeah, you're not even making higher lows because you were making them here and then you made a new low here. You made a low right there. You're still bouncing on the 200, but the reaction is terrible to previous levels. If we look at what was happening to the buy side previously, it was much, much better. And let's just slow it down for you for a second. Despite the way you moved, and if we really look, you dropped at 7:30, 8:30, open up about right here. Okay, you drop down to the 200 around 10 o'clock, and you kind of chop in this range. Usually when you get this chop, what happens? We have low volume. It's dropping. As we look at Yahoo Finance to give you the visual of the SPY, what's happening here? One of your highest volume days that we've had since, highest volume day, I have to go pretty far back, since December 16th. About 2 months. Over 2 months, I'm sorry. Over 2 months, this is your highest volume day. What does that tell us here? What does that give us notion of? That we're chopping here. It's, in my opinion, showing that bulls do not have the strength that they had previously, and it's being backed up by institutional money. That's my opinion. When we take a really quick look at what's happening here on Bookmap as well, very interesting behavior, right? So we see that drop very aggressive in the pre-market, and then the market opens around right here. We find a bottom around 10 o'clock like we see. And then ultimately we can see inside of Bookmap, and if you want to check them out, the link is down below, right? So we can, and you get 25% off if you're interested. But again, as we look here, let's look. You're seeing a lot of resistance as you push up, and then you start chopping here, right? This is pretty interesting what we're seeing here today. So we definitely saw a battle, right? So when we hit this 200 MA, what do we expect? We expect buyers to show up when we hit targets, right? It's fun. It's technicals 101. You set targets. If your target's at 4,000, when you hit 4,000, what do you expect to happen? You start to trim your position because you expect a rejection, okay? Now, I expected a stronger reaction from this, to be honest, and it wasn't. It just wasn't. You had some proof of buyers coming in here, and you can see minor walls, but the selling didn't get that aggressive here, and the buying tried to get aggressive again. You push back up, you break through, as you can see, a massive wall here, and then buyers give up once again, and you start to push back up, and then you just get hit. You get knocked right back down. You couldn't reclaim 4,000. It's a tragedy. If we really look at what's happening here, it's a tragedy. You get a really good visual here. Your CVD near the end of the day just continues to drop, and in my opinion, shows the relative strength going into next week. My opinion. So what do we know now? We're making lower highs on the Nasdaq, on SPY, on everything. You're just making lower highs as we zoom out here. Let's just really quick, just run through a few things. Okay. We're making lower highs, lower lows, breaking through every support. We're not really bouncing on supports. Volume is breaking out as we are dropping down mid pivot to the downside. I mean, CPI's missed. PPIs miss, PCEs miss, which the Fed says is the most important aspect of viewing inflation data. We have Bullard coming on and saying that we need to act fast and aggressive to maintain the Fed's credibility. Powell, haven't heard from the guy in 2 weeks. Haven't seen him. He's probably look. I was a bull. I was a bull during the Fed meeting. Right? I made money on it. We made money. Remember, we projected what was going to happen there. But when we look at this, where is he at? What is going on here? It has to be worrisome at this time. We have to be like, look, is there a plan? What's going on? Fed futures are now pricing in rate hikes to 5.5% as well. Okay, so that's still raising rates basically 0.25, 0.25, 0.25. So 3 more 25-point hikes is what we're pricing with the Fed futures right now. And they've been probably the most accurate when we look at the pricing structure from there. It's been the most conservative also. So when we look at that, it's hard for me to see a bull case here. What do we want to do here? What is our goal when we trade here? Our goal is to, one, follow the trend at all costs, right? Because if we can trade the trend, that's our most profitable time in the market. That's the easiest way to make money, is you follow the trend and you stay with its structure, right? We don't want to buck that system. We don't want to buck that trend. That's what we want to do. Number 2, we want to reduce risk at all cost, and we want to raise the profit margins, right? We want to raise the reward opportunity. So we want to lower risk and raise reward. As we look at this, I believe once you get below this 200 MA, I think it's an easy bear case from this standpoint, right? We've already been bearish. It gets even easier from this point. And I think the nail in the coffin will be when Powell comes out, he renews his hawkish stance, says that there's been a resurgence in inflation. That will be it. That will be the nail in the coffin, if you will. That's what you need to be watching for. Now, we're gonna go into a few plays now, right? We're gonna go over some plays that we're liking for this week. Now, I told you there's a play I was loving, and let me tell you, it's still Amazon. Now, Amazon, I've been calling out for like 3-4 days, right? We've been talking about it. Let's talk about a little bit more. When we look at Amazon, what's basically been happening since, since we've been talking about it. We started mentioning it back here around 95. You got to drop. You pop back up to 96. God bless. You dropped yesterday, as we mentioned, 96 down to lows of 92.3. Got a little bit of bounce into the day. But what's been one of the biggest signals from Twitter, from everything in between? Every day we continue to see aggressive selling on Amazon. It's probably one of the most heavily shorted via options that I've seen in the book right now, other than like SPY and Qs. It's absolutely ridiculous how many options are being bought on Amazon, calls versus puts that are heavily aggressive. If you look at the premium prices, there's not one premium over $500,000 for the past 5 days. Insanity when you really look at it. This is straight aggressive selling. Monstrous. I love it. Amazon, I'm still expecting downside here. Price targets down here at 90.13. And then I'm looking for a deeper retrace down to 86. But ultimately, over the next few days and weeks, I expect downside. These guys keep losing money. Their earnings were abysmal, probably one of the worst earnings that we've ever seen. And I think with PCE rising, PPI rising, CPI rising, I don't see a path for success for these guys unless they announce that they've discovered a cure for cancer, which obviously I don't think Bezos will be that guy. Next up, NVDA. And I can't even say it without getting excited, to be honest. Can't. We look at NVIDIA and it has everything on the Wall Street. So previously, I was short on AMD, which I got out of the remainder of those positions today at open. I cut all of those. I got all of my positions out of there. Now, I started doubling back up when we hit 80 at the end of the day yesterday. Clear drop, got out, done, donezo. NVIDIA, I love the opportunity here. Now, if we look at what's happening with NVIDIA, I'm going to tell you the same thing like I told you yesterday. The clear-cut answer to get into this is around 227 roughly. That's the level you want to see us break down below. So in a perfect world, which obviously Tyler, he's aggressive. He's a dog. He's all bark. Occasionally he will bite. if we look at what we're expecting here, what we want to happen, we want to see a break of this higher low trend, a push down test, hopefully break through, retest, and push down. If you want, in my opinion, though, once you break below this 227, I think that's honestly a great entry opportunity. Now, perfect setup, you would love a breakdown and then a retest. That's like perfect, beautiful setup, right? You know, it's not a perfect world. What did Tyler start doing today? I'll tell you what he started doing. He got the credit card. He said, look, boys, it's on me. All in, right? He started slapping it, okay? So right now in my market, in my portfolio, what am I looking at? I have Amazon puts, I have Tesla puts, and I have NVIDIA puts. I think Tesla's probably the riskiest one, but it's worth mentioning all of my options are at least for April. I think Amazon's for July because they were just priced well. Yeah, so that's what I'm looking at right now. NVIDIA and Tesla are for April. That's where I got those. Obviously, Tesla, what are you looking at here? What did we start doing here? What have we been saying with Tesla? If you break the higher lows you were making, right? Shorting opportunity. You broke down, hit, push down. Now I'm going to have an educational video coming out tomorrow, so make sure you check it out. Again, it's going to be free. It's going to be here on the channel. Now look, you got a clear bump and run. That's what this is called. You break through a trend, you come back, you bump, and then you run towards the downside. I want to see more aggressive selling occur here, okay? That's what we want to see. I would not be shocked to see selling occur into the investor meeting and even after. I'm not optimistic when I look at Elon and what's going to happen from this investor meeting. Possibly something could happen out of it. I don't plan on holding my position through it. I at least plan to trim some of it. But anyways, I still have a long time on this position. I still feel fine with it. I'm still relatively green here as well. But we want to see a break and hold below the 191, 192 region. That's where we get excited. If we look at Tesla also, I still think there's a lot of room down here. Okay. First target's going to be towards 180, 181. That's ultimately where I'm looking to start trimming this position, hopefully. But we're really set up, in my opinion, for a continuation towards the downside here. Before I let you, I'm going to go over VIX and a few other things. VIX, where are you at? VIX, you're around 22. Now, what have we said? Since you have the 0 DTEs on SPY, it's really affected and changed VIX entirely. We would love to see VIX above 24, but I just don't even expect it at this point based on what's happened and based on what's happening in the market in general. Personal opinion. So it's not something that I follow as heavy lately. DXY, I mean, dear God, it's just been going absolutely parabolic. I don't love the 15-minute chart or shorter time frames on here, but it's a clear pennant. I mean, what else do you say here, right? Clear cut pennant. And you're breaking again towards the upside. So you'll look good here. DXY wants to continue up. Bonds absolutely ripping as well. Look at the 10-year, kind of forward touch at this almost 4% level. But again, this goes pretty far back as well. And we go back to something like the 4-hour time frame, as you can see here. We'll actually go to the daily so you can see. Look at the reaction that we got from that 200 SMA on the 10-year yield as well. Going to the 10-year versus the 30. Very interesting what's happening here. Also, you're fully inverted once again. When's the last time we were fully inverted? September, June, December. December was a great time because it set up for a great shorting opportunity. I think you're doing it again. This has been one of the best technical viewpoints. One of the biggest leading indicators of big pullbacks has been the inversion on the 10 and 30. I can only scream it so many times. I would take it into account and go backtrack and do some research. TLT, you're getting dangerously close to breaking back below $100. You've seen a little bit of upside, a little bit of love here on TLT. But I think if you lose the 200 SMA on futures, you're going to break down below 100. And once TLT breaks below 100, it's looking really ugly also. The last thing I'm going to talk about is going to be the big six: Apple, Amazon, Tesla, Google, NVIDIA, Microsoft, all combined. If we look at what's happening here, you're sitting at your 200. You're sitting on support near 1,000. 1,000 is really your big level. I do believe these are about to start rolling over, okay? Personal opinion, what I'm looking at here. A lot of sell side. Apple has a lot of room down. Google, Amazon have already been getting hit. They're damn near all-time lows already. Microsoft, tons of room down. I'm telling you, Tesla, this could get very ugly also. all eyes are on the big six as well. So again, as I look at this is probably one of my more bearish videos, but I've been a pretty big bear for the past few days. Like it, love it. This is what you get. Have a good weekend. I'll see you tomorrow for some education. Have a good one, traders.